You want an investment edge, but all you hear is noise, hype, and half-truths. Every signal is solid information, but only if you can see the bigger picture. This is where the Quasar magic happens. Weather, charts, news, all financial signals, funneled into a single dashboard. Data alone isn't enough. Quasar Markets turns it into energy, sharp, clear, precise. Optimize with Quasar Markets today. Your edge when investing.
Good morning, Quasar Markets Live. Good morning, BigBeat. How was your weekend, my friend?
I worked. What I always do. I feel like I'm ticking off a few days, man. You know, it's interesting when you watch the markets in real time, Monday through Friday, in the cash markets. You know, the craziness, the volatility happens between that 9:30 to 10, right? Whereas in the crypto market, obviously it doesn't stop. But the volatility chilled out over the weekend, right? And that's what I loved about the crypto market. I think you and I have been talking about this market for that it's frothy, it's overheated, blah blah blah. I mean, we can go on and on and on and on and on about what we talked about. And Friday, it showed its rarely does it do this, but it showed its ugly head, right? Okay, yeah, we're overbid here on things. Even Kramer was complaining about the market because he thought the market was going to go higher. It was very obvious what was happening, right? There was a FOMO, there was a race to the top here. Got to chase, got to be in the markets. And we were sitting on the sidelines, Howard. And that's the difference in being an investor and a trader, a professional, than it is just I gotta be in the markets, this emotional trading, right? When people ask me all the time, hey, my kid wants to be in the markets, the first thing I say to them, run as fast as you can, right? Run away. But the second thing I always say is, you know, look, make sure you have a psychology background. Make sure outside of the business and finance, you need those tools. But psychology is the key. And the psychology in the markets over the last few months has been, we're going to trust the president, everything he says. We're going to trust everything that's going on around the world. I wouldn't trust anything right now. I mean, literally right now, the markets are not telling you that. The market's telling you we're overheated. There's a lot of froth, all of those things. And all of a sudden, they're gone. So, Howard, I think those numbers we're starting to get there where I'm at. I'm still a lot on the sidelines. I did buy on Friday afternoon because I thought that was nice. As most people here know, over the weekend, I bought Solana. There you go, Howard. I bought Solana on that dip. Under 160, I bought quite heavily. And I bought some more Bitcoin because I thought that was a nice little dip under the 115 handle, where Howard Greenberg said to buy. You said that, right? 115.5. So that's where we were.
No, I said 112.
Right, but you said the first buy was at 115 somewhere.
Yeah.
And I kind of agree with that. I don't like, as we know here, Howard, I don't like timing the markets. I just don't.
Yeah, so I didn't time the market. I just had a wish list to order in at 112. It filled while I was sleeping. I don't have to be awake to play the market when it comes to crypto, or any market for that matter. As long as you set it and forget it, so to speak. So right. I got it. I mean, I did get a little too greedy. Well, not greedy. I got a little too FOMO when it took its first pump up before it hit the 112, and I thought it might start to go up. I bought some at 112.766, and then that 112 filled. I'll tell you what, Ethereum wouldn't give me a fill. It would not give me a fill. When we look at the market, Steve, right now, Dow set to open up about 271 points, S&P up about 70 basis points, NASDAQ up about 80. You know, biggest news over the weekend to me, I mean, Trump fired the BLS commissioner after the disappointing jobs report. I guess it's her fault that the jobs report sucked. You'll have to explain that to me, please. But yeah, she's gone.
Okay. For those of you who don't understand the BLS, the Bureau of Labor Statistics, here's how it works. So around the country, not just in states. So some states have just one person. Some, like New York, has more because of the size of New York. It's hard. They have different organizations within the BLS that pull numbers from the states and pull numbers from like the unemployment office, right? It is extremely hard to fudge the numbers. You just can't do it. There are over, I think, 44, I think is the number of people that work in that office just for the statistics. when you fire the head just because you don't like the numbers, this is an authoritarian position here. This is no longer a position of democracy. I don't care what people think about. Look, you don't do this kind of stuff. Whether you agree with the numbers, whether you agree with how the data is brought in, it's disgraceful how it happened. Now, do I think, and have I been saying over the last 6 months to a year, that data needs to be upgraded at these places? 100%. So I agree with the president on, but you don't throw the baby out of the bathwater. This is terrible.
And I will point out, this is a Trump appointee just
right
4 months ago.
This is somebody that Biden
That's the other part is, this isn't cleaning out the swamp. This is somebody that
he brought the swamp and redoing. It doesn't make sense to me. Look, I will make. Yeah. I will call. Both you and I will call out politicians when they do dumb things. And
right. I don't. And that's what I want to make sure everyone understands. Because some people will just say, "Oh, well, this is just getting rid of a bureaucrat that probably shouldn't have had a job." Well, if she shouldn't have had a job, he gave her the job.
Right. And let me tell you, this is what Trump said just a few minutes ago. He said last week's job report was rigged, just like numbers prior to the president's election were rigged. This appointee's been around. I don't know what to say. I mean, you're just making things up, Mr. President, and I don't like that, right? I mean, it's not a Democrat, Republican, libertarian position. No, it's not politics. It's just what it is. It's very hard to make these numbers up. And, because you don't like them, I always say it's what rule number 8 of my freaking rules is you play the game in front of you, right? And the game in front of you says, okay, look, the numbers came in light. It should have been saying, look, he could have gone to the Fed and said, look here, Mr. Fed.
And again, let's not argue about the past. Let's fix the future. That's a DC problem. That is the problem, DC.
Yeah.
We also have a Fed governor resigning. It wasn't all that out of the expected, Adriana Kugler. So Trump will get another nomination here. And this could be, a lot of talk, watch who this is, because maybe they put the person in that's going to be replacing Mr. Powell in whatever it is, 12, 18 months. What do you think?
No. The president has the position to be able to appoint that person and then appoint the chair. So I think it won't be somebody that he picks that will be the chair. It'll be somebody different. He wants to make a political statement, so he will get rid of Powell in his ways. I'm telling you right now, Powell's numbers his numbers are probably. I give him a couple of months. I don't think he'll last him another couple of months. He's gone. I know he wants to stay there badly. Nobody wants to be kicked out of office like that, especially not the Bureau of Labor Statistics chair. But you're going to see this happen probably within the next couple of months. So the first pick. So as we know that there are 2 people, Waller being one of them, right? That there's possible whoever doesn't get picked.
Waller and Bowman would be the 2 there.
Bowman and
they've talked about the Martys. All the 2 Martys are the 2.
And Kevin Warsh. I would also like Kevin Warsh. Yeah. So any of those 3. When this one goes away, right, where the pick goes away, and gets placed in the position as a governor, you have to understand that, with Adriana Kugler, it is an interesting situation. Why is it an interesting situation? All right, because where she is, when I look at the position here, I'm gonna pull up her stuff here. So I think this was happened. It was on Thursday or Friday. I think it was Friday. Was Stephen and I were talking about this, right? That the Fed itself, majority of them are economics professors. They are educators. They are in that world. They are not people that are in the business world, right? And she is, quite frankly, public policy at Georgetown University, but she was also chief economist to Labor Secretary Hilda Solis. So, there's a lot going on here. So she understands policy. So when she steps down, she was a Joe Biden, Barack Obama appointee. So now all of a sudden this is becoming political. And I think that's what we got to be careful on when the Fed becomes political. The last time this happened, we went through a Great Depression. So I want everybody to understand that this is not political. This is very, very, very much so understanding the economics behind this. And I'll also say that Adriana has a background, or does have a background. I guess she's not there now. A background in labor statistics. I'm not making this up. She does. She has a background in labor studies at the National Bureau of Economic Research from London. So this is people, folks, think about this for a second. I mean, this is what I'm saying. Like, we have to be very careful about data and how we present it, because data is very important. And we need, and I agree with the president on this. We need to upgrade how we collect the data. But to say that the data is wrong because I don't like it, that's very much at the core of who we are as Americans and as a country, right? We don't like something, so we're just going to get rid of it instead of trying to change the reality here. Okay, I agree. It's kind of sad that we have a president that does this. But if we move forward and if data is collected in a different way, we don't need 40 people at the Bureau of Labor Statistics. And I agree with the president on this. Collect data in a much better technology-wise, AI, however you want to do it, in a better, in a manner that maybe it helps us understand the data, which Quasar Markets builds, right? So, we have to have clean data so that we understand the future. So I agree with the president if the data is bad, but it's not. He's wrong how we do it.
Remember, he also shut off all their subscriptions to the actual data too.
It's unbelievable.
So that's another part of it is they, And one last thing on politics today: Trump's reciprocal tariffs took effect Friday, and I had a laugh because I took this quote right from a very famous periodical. The next thing. Some countries struck last-minute deals, others didn't. That's sort of the laissez-faire attitude, isn't it, right now? It's almost like tariffs, whatever. Some are in, some are out. We'll see what happens. I think, to me, that's just sort of weird. I didn't expect that to be part of it. The only country that seems to not be the case with is Swiss stocks are tumbling after the 39% tariffs that were put on them. So they aren't. Steve, we do have a big week of earnings still coming up. We have Palantir today, Disney, AMD, Eli Lilly, McDonald's, Uber, Airbnb, Shopify, Pfizer, Tempest AI, and others. 82% of the S&P 500 that have reported so far have beaten expectations. So that's positive. But as we've talked about, expectations versus year-over-year growth or something is, data can be confusing, because if you set the bar only to jump 2 inches, even I can clear the bar.
We talked about that over the last few weeks, right? People say, "Oh, we're beating on earnings." Well, yeah, it's great when you lower the bar. It's like giving an Olympic gold medalist as a hurdler, and you lower the bar all the way to the floor. Yeah, of course you're going to beat on earnings, and that's what's happening. I'll tell you a couple of things in this situation. And you're laying them out for us right here, Howard, and it's good. Palantir, Disney, AMD, Eli Lilly, McDonald's, Uber, Airbnb. Guess what they all have in common? They're all consumer stocks, right? They're all things where people are buying food. They're buying drugs. They're buying chipsets. They're AI. They're taking car rides in Uber. Everything that a human does or an American does, we are seeing that, right? But if we have these tariffs on, I have to ask people are out there, if anybody here knows, can guess when the last time we've had this much tariffs on. In what decade did we have this much tariffs on? There are 3 specific time periods, which is why we pretty much ignore tariffs, because they don't work. They never work. They have never worked ever, and they won't work in the future. Eventually, we'll get a few dollars in the future, and then the world will realign, and then we'll be cut out again. 1930, Smoot-Hawley. That was a terrible time in this history of the country. We had to dig out of that for decades after that, and it ended up being a war after that, right, in the 40s. So it was a terrible time. I'm not going to make this up. The time before that was the Civil War and cotton. Slavery. So this is, what are we talking about here, Howard? I don't really understand this. And then when you talk about it, there was a protectionist era in the late 40s and 50s, and we haven't done it since then because we supposedly had learned our lesson, but obviously we haven't. Tariffs are meant for very specific things. Whether we want anti-dumping, right? So some countries dumping product on us at a very fast rate, and that hurts our public. Yeah, guess who's hurting the most in all of this? The very people that voted for Donald Trump, farmers,
American consumers. Yeah,
the American consumers. That's right, and we're getting hit hard. And when you lower the bar here on earnings, so this is why you're seeing these sell-offs. I don't think the sell-off is done. Quite frankly, there is some buy the dip mentality here, and I love that, and I'm going to take advantage of that. But I don't think the pullback is done. I still believe the taco trade. You and I think still have a bottle on till the end of Friday. I think you're going to see the president pull back a little bit. I think it's not Friday, it's 11th, right? That you and I talked about. Whatever the arbitrary date that Trump has set now, taco trade. Look, I'm not trying to be hard on the president. I think he's trying to do some things. He's trying to do the right thing here. I just think he's got bad advice. Right? He said this since the early 80s in his own self that he thought tariffs were the key, right? And he's been told over and over and over again they're not. And in his own businesses, he doesn't like tariffs, right? Because his companies are in other countries. So think of it like his golf courses, right? He doesn't want to have food prices and at his hotels, and these things go up. So they're not working, right? Yeah, we're getting a few more dollars in. According to Kevin Hassett, we're about to balance the budget this month. It's crazy. When I look at the markets, the markets and economics, are they meeting each other? No, they never do, right? That's the mispricing of pricing, as I always say, right? So when I talk about the mispricing of pricing, are we in that situation where the price of these stocks are matching what they should be? And the answer is no. As we watched retail chase over the last 2 weeks, watching that was interesting because I was taking advantage of that, but I was sitting on the sideline last Monday, Tuesday, and Wednesday, right? And then, of course, Friday, I'm smiling. What am I doing now? I think people are asking, right? What's BigBeat doing now? Well, I'm gonna tell you what I'm still doing. And I think my hands are about to go numb, Howard, by sitting on them, right? Because it's not easy. Because I want to be in this market. I want to play around with these nonsense retail. But if you believe in any politician, Democrat or Republican, I promise you, Howard knows as much as I do, living in DC as long as we have. They don't care about you. They care about their own bank account. Look at Nancy Pelosi's trading. Let's be real honest here. Like I'll give both sides bad juju here. I mean, this is not cool. They have inside information. They're telling you one thing, as my grandfather used to say to me, do as I say, not as I do. Right? This is what's happening right now. Right? And we're not seeing that, Howard. So right now, I'm going to be asking Schwab tomorrow about Palantir. They have all these contracts, but Palantir is over its skis. It's way too much, right? I mean, this stock is not.
We'll find out today after close. That's when their earnings are. So that's for sure. Hey, let's get back into things that matter. Ethereum, happy birthday, Ethereum. 10-year anniversary. And the sky is falling because CNBC today called Ethereum the foundational for the future of finance. So I'm going to sell all my Ethereum today. No, I'm just kidding. But yeah, it is just amazing to see the difference. We know major TradFi players like BlackRock, Robinhood rely on Ethereum's infrastructure. Robinhood is basing its whole future on, Ethereum's layer 2 solutions to be how they go to market, and BlackRock also, quite frankly.
Remember when these companies and they are all giving Ethereum, Howard, you and I have been around Ethereum since the beginning. Remember how it was like, oh, Ethereum and all these are at that point it was a meme stock and it was all FOMO and what does that even Ethereum do? What is Ethereum? Remember all those? And now it's the foundational for the future of finance. It is not the foundation of the future of finance. It is a pillar of it, and I think Ethereum is going to be part of it, but it's not the foundational for the future of finance. God, where do they get this stuff from? I mean, they're just making it up. Howard, you and I just talked about it for the last, I guess, 10 minutes here. Here you go. Goldman Sachs now warning the dollar is set to slide further as rate cut bets rise. and data reliability fears grow, and the yen is seen benefiting. Goldman Sachs is now saying exactly what I've been saying. Right? So all of these things that we're talking about, Ethereum, being at 10 years now, and the change and how we get our data. The world's changing faster than average time period, right? In a time of 10 years. So what I'm saying is, stay on the sidelines a little bit. Let's get some clarity here. I think the problem is, and I've said this before in the past, clarity is my issue. I want to see clarity with these tariffs. I want to see clarity with these numbers. I want to see clarity. And then we can make decisions. The more data that we have, the better decisions you can make. And I think right now that that's not the case.
Yeah, can't argue with that at all. When we get into what's going on here, Steve, got to talk about Berkshire Hathaway. Just had their earnings down a little bit here, about 1.13%. Took a hefty markdown on their Kraft Heinz business, reducing its stake, carrying value from $13.5 billion to $8.4 billion. A $5 billion impairment wiped off its total net income after tax. Second such write-down since 2019. So Mr. Buffett still having some headwinds in front of him.
Who? I mean, I don't think Warren's actually the guy that's in charge anymore. I think Anka Jane and the other guys are actually in charge right now. Good morning, Zora. When I look at Warren Buffett and he's sitting on the sidelines with a pile of cash, I mean, just in a massive, it's a massive amount of cash, and he hates cash. He hates it. He wants to put it to work. He does not like cash. He talks about cash all the time. There's no win in that. You're losing money on cash. He knows. Dollar depreciating on a daily, but he knows. He ain't stupid. He's in cash. And he's telling you that right now. Like, look, I find no place to put my money, and that's what I'm doing with it. So that should tell you everything.
Yep, like you said, his famous cash pile has dipped to $344 billion. Still the biggest corporate war chest on earth. No stock buybacks this quarter, none since May of 2024. So he feels his stock is still overvalued. And they remained a net seller of stocks for the 11th straight quarter, offloading another $3 billion more than it bought. Continues, as you said, to reflect his stance that nothing's cheap enough yet.
Right, exactly. And, even with his raising more cash, he raised about 1%. So he knows where he's at. He's okay with this. He's okay where his positions are, and he's okay. He's not saying, I'm going to sell 5% of my portfolio, 10%. He sold 1% in a quarter in 3 months. So he's not going out there and saying, I'm going to dump my portfolio. Because why? $330 billion on the sidelines. I mean, $330 billion. I mean, that is asinine how much money that is. I mean, he could probably put a part right now. Disney's market cap is $208 billion. I mean, he can sit and write a check to Disney and still have cash for 1,000 other companies. I mean, that is just asinine amounts of money.
It is crazy.
Not that he can.
Getting into their earnings and again in margins such, their operating earnings dropped 4% year over year to $11.2 billion. They talked about weaker results in key sectors like insurance and freight. Their net income fell to $12.4 billion from $30.4 billion a year prior, largely due to that Heinz Kraft impairment and lower investment gains. And their total Q2 revenue was down 1.2% year over year. So they are struggling even against lower expectations. So we'll see. And again, their stock's down about 12% since he announced that secession plan.
I'm looking it up again just to make sure that I understand the exact timing here. He's right. He's so after going after Kraft Heinz, he talks about it on a specific level of what he likes to buy. And I think, Howard, you talked about this on was a Thursday about ice cream and your Dairy Queen, right? You like it. He likes to buy cash flow businesses that continue to make cash, that puts it away for a rainy day. Now, food does that because we eat food. We need housing. We need very basic things to live and survive. And those are the things that he likes, right? So if you need more things, toilet paper, whatever, you need to move things around the country, coal, guess what that does? It's done by the rails, right? The railroads are the biggest mover of product around the country. So he owns a lot of the rails, BNSF and a few other companies. He owns, believe it or not, Nebraska Furniture Mart, right? He understands the consumer, and he knows the consumer is not happy right now, and that's why he's raised the cash. So I'm going to go back to, I'm going to go back to something that happened a few weeks ago that I was just in. I had to go buy some stuff myself for the house. We had to need to stock up a little bit. Hurricane season's coming, and blah. We know it's Florida. And I was reminded that the bankruptcy of Del Monte, right? This is something that my great grandparents had. My grandparents had. Del Monte Foods was founded in 1886. I mean, that's like 30 years after, 40 years after Civil War. And when I look at that progression of Del Monte Foods and what they owned and how they grew and everything from cherries to fruit and how they sold their food, bankrupt. Why? Because there's more variety of things to buy, and it was mismanaged, mispricing of pricing, right? They didn't do it correctly. So when I say that, they're now looking for a buyer for all their assets under court supervision. They've got right now roughly between $1 and $10 billion in assets and liability now tied up in a restructuring. Think about that. Okay, so if Del Monte, a company that provides food to the United States of America and around the world, that's a problem, right? I already said to you, farmers are in trouble over tariffs. I already said you're seeing M&A all over the planet, and yet Del Monte Foods is going bankrupt, right? We have a massive problem that's not going to be solved by tariffs, a problem that's not going to be solved by Warren Buffett buying out Del Monte Foods. But I'll tell you,
markets are open here. We are open 559.13. Big move to the upside here by the Q. So algo's pushing us up here, pushing the market directly to the upside here. 559 looks like we're headed straight to 560 here. Now up over 1%. Dow Jones opens up half a percentage point itself at 43,805. First move there to the upside also. SPY opens up 626.23 here right now. Now, wow, everything. So everybody's liking the news so far here. We'll see.
Look at them doing this, Howard. I'm looking at FIG right here as a buy.
FIG, huh? You're already jumping in. Wow, look at that.
I mean, it's crazy here what's happening here. I think what we can see here, quite frankly, and very, very quickly here, is a jump to the upside here. Oops, did I miss it?
Did jump a little bit there. Mag 7 all opening up to the upside so far. The biggest winner so far, Meta here now 762, up about 1.58%. Apple, nice little jump here, back over 205. Nvidia trying to break back above 175 here. Tesla up 1%, back above 30. Ooh, that's dropping down though. Back above 305 here, but could lose that handle. Was trying to challenge 310 earlier here already this morning. So we are seeing volatility. Tick is slightly negative, but that's been a pretty big swing itself. Advanced decline up 4,400 on the open here. So markets are definitely rebouncing here after the weekend news, everything digested across the board.
Mm-hmm. Not liking the selling here.
It's still positive about 200, advance to climb 45.60. VIX has come down a little bit here, 1854. As I mentioned, Ethereum's birthday, I was trying to buy Ethereum at 3,500. I missed the bottom. Was trying to buy it at 35. It ran away from me there too. I targeted 33.10, so I definitely do miss them. Got a little too aggressive there. It didn't pull back enough.
Solana at 164. I'm happy, right?
Yeah. Solana's got some short squeeze ability too, but on a break above 168. So keep an eye on that. It's actually got on-chain metrics set to the downside. Wow, Berkshire now down 2.4% here, 461.20. That said, I get interested around that 455 level. So gold back at 33.76 here, Steve, up about 40 basis points here today. Nice little jump up. DXY back down at 98.64. So all the way back down to that, what was sort of that key support resistance zone. We'll find out what Mr. Flanagan has to say about that soon enough. Q's up 1.07%, trying to challenge highs of the day. Tesla trying to bounce off of that 305 level, trying to bounce back up here. A lot of green across the board.
Bitcoin's not holding here at 114. We got to hold here, Howard, I think.
Yeah, it's actually 113 is now the key support level sort of below us here. So it's a little different setup now.
Fig now down 13% here this morning. Whew. Ouch. Might have made a mistake here, Howard.
Oh, you did go in? Okay. I didn't know you did. Sorry.
Not too scared, though.
Look at everything here. Crypto mining stocks in general bouncing back pretty well. They will be sensitive, of course, to Bitcoin's price today, without a doubt.
Wow, Qs are highs here.
Robinhood dropped down under 100 here. It gets interesting for me down in this level.
Talked about that too as well here.
I want to see. And its decline coming down slightly, back about 4,300, 4,285. So coming down slightly here. Q's now back at highs of the day. Dow Jones now up 75 basis points here, 43,910. Do we challenge back up to that 44, fill that gap even though it's 44,135? Strong start to the day here, Steve.
Yep.
That's a little bit of a mixed bag across sort of the crypto-centric stocks. Coinbase down a little bit here right at 314. Hood back below 100. Like I said, that's the one that I'm probably interested in here. And you kind of pull back towards this 93.70 60 level definitely get interesting for me.
All right, I've doubled down here on Fig on the upside here. Let's see if I can. I've lowered my my input here, so my cost basis is way lowered now, which is good. If these insiders can stop selling a little bit, I think we could see it pop right back up. Maybe the insiders are scared. Yeah, there goes Tick now up 340 now, so the upside. Mm. Oh, this is really heavy selling here in Fig.
It is. And remember, there's did options open yet? Let me check that here. Yeah, options open today. That's the other thing that's going to be playing against that a little bit. The people that said they wanted to short it now can do that.
Mm.
Now down 102.60.
They'll have to cover some point today, I think. Okay, back up here. It's kind of quiet in the markets, really.
Yeah.
114.
371 kind of bounce. Still moving up here a little bit. Seems to have plateaued. Bitcoin bouncing back a bit.
Yeah, come on, Bitcoin, get up there. I think once we get breaks back to the 115 handle, it could be good.
Any break above 115.5 is your breakout level. So you hit 115.5, you will start
Hearing
to
that
see
Putin has had a phone call here with Netanyahu.
Yeah, they need to stop the madness there also. Here's something you don't hear every day. Litecoin making a breakout here today, up 7%.
Yeah, is that because the Ripple getting not so much love?
Nothing to do. Litecoin doesn't have anything to do with Ripple. I don't know what. I have no answer for you why this would be moving up today. I was actually going to go to the one below it to mention that XLM was moving up nicely, and XLM is a good predecessor recently to what XRP is going to do next. XRP just regained the $3, which is a bullish level for it. So watch. And a lot of the cryptos regained a key fib, retested that key fib level, and have broken to the upside. So true showing of bullishness across the crypto ecosystem in general today. I'm very bullish on crypto today.
Okay, I like that. Me too.
That's that same structure breaks, as you said, across your Solana, where the 200-day MA regained 200-day MA, tested 200-day MA, blasted off that level, broke yesterday's high, broke the previous high of the day for the weekend, and now moving back up towards that 168. Any break of that 168 gives you a squeeze up towards 176. So we've got a lot of good structure here. Big news over the weekend is China is going to try to manipulate crypto prices. I don't know if you saw that, Steve. They have come out with their regulations pro crypto this time, but they will be the liquidity providers to the Hong Kong exchanges.
Whatever.
Solana breakout here. Solana breakout 165.25.
Whatever.
Well, what they're doing is it's a bigger answer. From a bigger macro look. The U.S. and especially the current administration really wants to create a Wall Street effect onto crypto where it's done here, whether it's in Miami, whether it's in Dallas, whatever city it might be, we don't know yet. But that we are the leaders, and China, realizing that, is now trying to invite back businesses that have left.
And yet last week, Xi Jinping said Bitcoin and crypto is once again.
Well, they've announced they're going to trade and sell off their holdings, so they're holding up towards that. But they want to be the liquidity provider, basically the market maker for all Hong Kong exchanges. So to me, very very bullish for U.S. based companies like Coinbase.
I agree with that. Yeah,
because you just took away. Most countries won't want that risk threat. In the past, China has seized people's monies.
Whatever China says, just ignore it.
Solana got rejected pretty hard at that first resistance level at 166.50. Yeah, that's kind of the case. 165.50 rather. That's the area to watch here.
I've lost on my fig. I'm okay with it, Howard. I want it out because it's
you can't much. Take. Hey, listen, you've been on quite a streak. You can't win them all.
Yeah, 3 straight weeks of wins, but yeah.
10-year pretty flat here today, Steve, down at 4.216. I got to ask, does this mean I can get my rates down enough to refinance? I need it by, I think, July of next year.
No.
Damn it, Steve.
Oh crap! And now Kramer's talking about Figma. Maybe it goes back up.
101.40. Let's see. He started talking about a 101.40.
There it is. Oh, is it going to bounce back up against me now? Oh,
I got to pull that up now. The old Kramer effect.
Oh, the 102. Yeah, it might go back up now. Who knows?
Man. Bitcoin 114.750. So here you go.
103 on Figma. Come on.
114.8. Nice move up
The
by
very
Bitcoin
second he
here.
starts
Come on,
talking about
baby.
it, boom, it goes back up. The
We're doing
103.50
the
now.
upside.
Oh,
Robinhood regained that 100 mark there. Like I said, I liked it under 100. Chips.
104 now in Figma. The very second he starts talking.
Gotta say, the chip sector very strong today. Outside of On Semiconductor, which did have earnings here, getting hit pretty hard, down almost 10%. They did have a little bit of news there. They gave weak Q3 guidance. And if I get back to shoot, where is my here we go. There we go. On Semiconductor, they missed their guidance. EPS estimates were 64 cents. They came in at, or excuse me, they came in at 58. Revenue forecast came in below consensus. Q2 was fine, a beat on revenue and basically in line in EPS, but forward guidance signals slowing demand, especially in the auto EV related chips and industrial applications. So not really a surprise because that was similar to what we heard out of Qualcomm, right? That they were having problems with the stuff that had to do with the cars, and that was where a big problem were. There are a couple of few that others that we have to talk about here this morning that are down. BRKR, which is Brunker, excuse me, down about 14.5% here on earnings miss. They slashed their full year EPS guidance from 240 to 248 down to 195 to 205. Cut their revenue estimates and blame attributed to slowing demand in molecular diagnostics and forex headwinds. Market disappointment is sharp given Bruker's usually stable medtech profile. So that was one.
We're hearing reports about Iranian X accounts are now reporting explosions across Iran, blast near the airport in Tehran.
We do know that we moved ships closer to Russian areas and all kinds of stuff. I did want to point out, Steve, too, foreign exchange was a big loss at Berkshire Hathaway last year. So we need to get Mr. Flanagan employed over there to manage their FX positions, down about $877 million in the last quarter. I just want to stress that because as I was getting into these other earnings, we see a lot of them that talked about that are down is really based upon foreign exchange losses, like we said, Bruker, On Semiconductor, Berkshire Hathaway. There's just a litany of them that's the case. Steve, Boeing getting hit kind of hard early this morning. I don't know. I'm going to take a quick look here and update that. And it's worker issues again. 3,200 machinists in your former hometown of St. Louis went on strike Monday morning. Plants are involved or tied to defense contracts, including F-15s and T-7A aircraft. And we know that this strike adds pressures to their already fragile delivery timelines and their labor relations after last year's union issues in Washington. You a buyer of this dip on Boeing?
No. No, I'm not.
Advanced decline sitting right about 4,400 here. Qs are up 1.42%. Now at 561.77. Highs of the day at 562.30. So it has pulled a little bit off of the highs of the day.
And Figma now down below the lows of the day here, almost about to go under 100 here.
Yeah, VIX down 1822.
Tick dropping.
So again, VIX is pulling back a little bit here. Bitcoin pulling back a little bit also after trying to make that run and getting challenging, trying to get all the way to 115. Didn't quite make it. Now back at 114,600. So it does look like a little bit of choppiness in the market here. Ethereum, nice move up, trying to challenge and did break above 3,600, but unable to keep that momentum over the last few minutes. Tick still positive here. We look at the S&P, all of the 11 sectors are in the green, so it is a broad, buy the dip mentality, like you said.
Yep.
Advanced decline sitting 4,400 to the upside.
Figma right at the 100 handle here. Look at that. They're trying to break it. Those $100 puts now.
Yeah, absolutely. Rigetti AI looks like to be a winner today. Rigetti up about 10.23% here this morning.
Today was a rough one. Yeah, there we go. Figma now below the 100.
99.50. Woo.
Yeah. Now down 18.
You did the smart thing and took the small loss before it became a major loss, right?
Correct. Yeah. I got nervous down here.
That is how you do it. Roku up about 5.38%. I had to watch how about my Red Sox there, Steve?
Who?
On quite a run there, man. Yeah, you can say that, but we're on a run, baby. We swept the Stros.
Still a lot of baseball to play. Qs are on the highs here.
So I said, market's still moving up. Berkshire is getting to an interesting spot for me here, Steve.
Yeah.
I like that 455 area is what I keep pointing out as my spot. So could be getting a little Mr. Berkshire here today. I'm going to put an order into the order books. Like I said, I don't try to time the markets. I try to price my price. Disney going into earnings here over the next day or two. I think tomorrow, right? Yeah, tomorrow. No, Wednesday. Right now, about 118.80. Be an interesting one to watch. Tick has gone negative for the first time in a while here. Tick has come negative here. Bounce back up. Tell you what, I will look to re-enter a shorter term VIX on any kind of pullback to 116. I mean to 16 or so. As I talked about, I did exit the short term one. The long term leap is still in play. I got into those down at 1448. Banks moving up to the upside today pretty nicely here. JP Morgan 1.17 to the upside. Morgan Stanley up 1.24%. Goldman Sachs up 1.76% here. UBS up 2.1%. So Mr. Flanagan, you are correct as you have said it. And Steve has said at Big Beat, they don't get paid to sit with investors' money. That's what people, yeah.
Yep.
That is a very true statement. I think they're getting ready to spend it. They're going to buy. They're going to buy. What it is, I don't know. I think they want that.
I talked about this morning. Del Monte's sitting out there for them.
Yeah, I can see that. I think they want the other railroads.
Hey, if you're gonna have ice cream, you gotta have cherries, right? So
there you go. You are right. Yeah, it goes with it. Fits it.
Figma now at 98.72. Whew.
Yeah, that buying is fierce. I told you I'm a buyer at 50. $114.8, nice bounce, Bitcoin. Let's go. We can break above 115 here. Watch for some squeezes. I think they tried to trap those bears this morning. As I mentioned, the bulls do have control of the market currently in crypto across all of the sectors, from Bitcoin to Ethereum to the alts.
I have a meeting here at 10 o'clock, Howard. We can bring Steve in early.
Absolutely. Let's get him in here.
Morning, gents.
Good morning.
Good morning. How are you doing today, sir?
Yeah, doing good. These corrections of any move in our markets today will be short-lived. And you can see today you've already got a nice pullback. I'm not saying we're going to continue higher. We're in a bull market, and corrections will be short-lived. And in today's computerized world, short-lived could be 1 to 2 days, and that'll be it. And then it starts its trek back up. So, Friday we all saw massive hits to the portfolio after 2 weeks of grinding out highs, but that's going to be the characteristic of this volatile market we're in.
Right.
Yeah, no, I don't argue that at all, sir. It's definitely a buy the dip but sell the rip. You got to be playing both sides of it. We're not seeing a full breakout one way or the other. We're just seeing some enhanced volatility to both sides.
That's right. And watch the Fed speakers this week, right? That's going to be
off their lock off soon enough. And we'll see them hot and heavy here. That will give us a little bit of a guide. And when you say that, we look at the 10-year 4.22 right now, so up a little bit in the cash market today, but down significantly from where it was. I mean, we were at that 4.4 level before the labor news came out on Friday.
Yep, bond traders, there's going to be a whole lot of hurting going on very soon, because you look across the globe, there is no inflation. China is now fighting the grips of deflation. And in order to address that, they've made some fiscal moves. They've added money here and there, but it's not getting, because of the bureaucracy within China. So forecast out over this year, watch for the zero interest rates and watch for quantitative easing to come forth in China. In Europe, 2% inflation, 2.1, 2. The Eurozone is already at this quoted goal that these central bankers came up with of 2%. Switzerland, their inflation rate for the month that came out today for July was 0, and they're running now at a 0.2% inflation. So find me where the inflation is, and the big news will be this week. Bank of England up. What are they going to do? I believe we're going to see a nice cut in the Bank of England. And sterling could be a great currency to play this week.
Okay, well, let's get started with the DXY. Let me get the chart up here for you. So, we had seen that clear breakout from the cup and handle. Now we've returned right to that what was key resistance in my mind. I think that you had pointed out also at that 98.65 area. Is this the bottom, or is this, are we looking at more downside before we break to the upside?
So if my view would be correct, and you're not paying me anything for a view, so it's not worth much. But my view here would be that we're within about 50 points of the low. Presently, Dixie's trading 98.65. I can see us down to 98, figure 98.20, somewhere in that zone, but it holds right there. If you draw a horizontal line to the left right now, you will see that the low we're at right now, look how it matches up to all the tops. I always say, it's very important to watch previous, when you're technical trading, previous ranges, because that's the price action. And we keep analysis very simple, buyers and sellers. So it comes up, tops, and then drops. But when those tops break, as we can see to the left of this move, that's when one side wins and you get the follow through. The retracement, people remember, computers remember, this is about the low right here. You could stretch a little bit lower, but I do not see us trading below 98 unless, more negative news comes out on the tariff front. And that is what the knee-jerk reaction is. Tariff equals lower dollar in the market consensus. This is a very prevalent trade in the marketplace, and it is very heavy. So I think the time is my side. I think that the market will get broken, but not just yet. In order to break this market, you've got to take out that 160 level that we talked about on Friday.
Right, absolutely. So once 100.60 gets to be your top end, that we got to see that clear break.
Right, because the prevalent trend is that the tariffs are going to cause recession, and so you don't want to be in the dollar. Well, at a 3% GDP that just printed versus the rest of this world right now, that's a tough play to hold up. And if England cuts rates with the Europeans already at 2%, it's a very expensive trade to hold if we go into a sideways trading pattern because of the interest rate differentials. To finance a short dollar position means you pay away a 4.5% versus the currency that you're owning, let's say the euro, you're getting 2%. So you are net basically 2.5% out.
Right. And you had pointed out, we are right at that key level. You pointed out the other day, that 133 mark here on the pound US.
Right. So bring up the pound and then look at 132.72 was last Friday's close. Now, if you go in a historical chart and draw a line right through that 132.72 horizontal and open up a lot of data, this 132.75 zone has been instrumental in many, many of the moves in sterling, tops, breakouts, drops. So I'm watching this level. Sterling's my attention this week. I'm watching it carefully. I believe if we trade below 132, let's give ourselves a little bit of discretion. I'm calling 132.71. 2 was the close on Friday. So if we break 132.60, I always try to give a little discretion to my trading points. Then I think we're going to slide very hard in sterling, which could go along with the dollar bouncing back up here. Today is a throwaway day. I'm not really looking for anything today until we start to get into the meat and potatoes of the week. And I want to see what Fed officials begin to talk. Market consensus now is quickly, and you see how fast our markets move in sentiment. We're now quickly on to 2 to 3 rate cuts this year. So that would mean you're getting rate cuts on every of the meetings ahead. So I don't know.
Yeah, I mean, I try not to get too far ahead of myself on that one. The rate cut numbers can move 60 points in one rear view mirror look. So,
and that's right. And that's a big factor, though, when we talk about the dollar, because at 4.5%, if you're now forecasting out several rate cuts, well, wouldn't you want to own U.S. bonds here and get the appreciation, not only of 4.5%, but get the appreciation of the bond itself as interest rates drop? So then tie in the dollar. if we're an outside investor, this is, then of course the dollar, after a drop off from its highs, looks extremely attractive at these levels. With a market that is very underweight dollar positioning, this, is probably a window that I see closing very quickly in a few days.
Yeah, I mean bond traders have had a rough year, to be honest with you. They're always you often hear everybody say the bond traders, the smart money, and they're the smartest people in the markets. But man, they really have been on the wrong side of it like 3 or 4 times over the past 18 months to the big level.
As an FX trader, I look at the bond market, and so many of the pundits out there in the marketplace that do all the talking are former bond traders. And so they don't like what a foreign exchange guy will say, but they're always long. They're bank traders. They're always long. They always have securities. So, of course, to them, it's a force. It's an easy market. When the market at large begins to trade against them, that's when they experience a lot of pain. And that's a rare move because they control much of the pricing that goes on in that marketplace. As that marketplace opens up, and it is, the transparency of price that's going through the rates market today is beginning to show where the actual prices are. And that is a key to opening up everybody's participation in the marketplace. And that's why I think bond traders are going to have a very difficult year ahead.
Okay. What are you looking at with the euro today there, Steve, or this week? Anything at 115.76 right now?
Studying the bounce very carefully here. Euro dollar last week, 115.85 close. We're sitting around the 80 level right now. We're slightly below. I'm watching it carefully. We could go both sides of this throughout the day. When I give a close, that's a Friday close, so I watch it carefully. As we trade above it, I'm more inclined to say, let me get long. When you get levels that are so close to where we're trading versus a Friday close, you get above, you go long, you get below, you go short. Now, you can get wiped out on that trade in and out 4 or 5 times, but once it establishes the break on a daily close, you're going to catch the bigger move. So, you keep your positioning small and you begin to build your positioning as it breaks. But I don't like the euro. Too many people are in it. They're all saying it's the alternative investment outside of the dollar. Well, with 28 member nations and sometimes them all going in different directions, despite the surprise that I did have that the EU concluded its trade agreement with the United States in fairly fast format. I did not see that one coming.
Right.
Which could be a watershed mark because that's one of the first times the EU has made such a quick decision. And if the EU, keep in mind, the European Union is the shadow government that goes over top of 28 member nations. There are still independent governments in every Germany, France, Poland, Switzerland. Not Switzerland, but Italy. Each of these have their own governments too. So it's a remarkable transformation possibly that we just saw in the euro there, which could be something we keep in mind down the road. But for right now, there's too many structural problems within the eurozone for me to want to be an alternative investment to the dollar. So I do think it tops out shortly, and I would be looking to make a downside play.
Okay. I don't know if you saw, I was shifting over to the USD CHF, Swiss franc. 39% tariffs, their stock market traded this morning. We see a jump up of about 40 basis points here on that USD CHF. What do you think of all that?
Well, let's just say the fact that dollar Swiss is below parity of 1.0 is always amazing to me. However, when you look at the Swiss franc, you got to step back and understand its play. The Swiss franc is the alternative to the euro within Europe. So long Swiss, short euro has been an incredible trade. It's the euro Swiss trade. Euro short, Swiss long. Even though you're getting no interest rate, it offers a safety within Switzerland, within Europe. To understand the Swiss, you've got to go back into when the Swiss franc broke. They had a peg to the euro dollar at 1.20, and they basically woke up one morning and said, we're not going to. When you peg a currency, a central bank must defend that level. So every time it traded below or to 1.20, the Swiss National Bank had to buy euros and sell Swiss francs. So Switzerland is a problem in the making because the amount of Swiss francs that SNB has printed in the marketplace will eventually one day come home to roost. And I'm talking billions and billions considering the size of their economy. The Swiss franc is one that long ago I just realized this is not a currency I like to trade. But saying that and asking the question, I am only looking to be long the dollar and short the Swiss franc. It's just that the wave against my short Swiss is a European long Swiss play. Right. But eventually one day that will unwind.
So that's one of those long-term macro views. I love it. What do we? Yeah, the yen has moved in the opposite direction here. 147.072 now in the yen. You know, what are you seeing out of Asia right now? And
so the yen is a safe haven play. Whenever there's a problem, everybody jumps into the yen. Look at that move down on Friday. You know, that's a significant, bar chart there. With a strong move into yen because yen is a safe haven. However, Japan no longer, is the safe haven that it always has been. On a given day, yes, but as you begin to unwind, that trading day, there are a lot of negatives moving into the Japanese trade right now, and one being their government is a coalition government that, is yet to be seen. Will the prime minister stay on? There was a very strong gains in their Japan First party. So I don't think it represents that play. They're a 0.5% interest rate currency. They've got to get on with moving on with, raising rates at some point, but their economic statistics are beginning to weaken. And in that light, Japan has fought deflation for 25 years. They are not going to be quick to raise interest rates, and that could upset the marketplace. Another ticking time bomb, they own over 50% of the JGB market. Now, while that may not be very much, it's essentially one hand going into the other pocket and, financing their own selves. I don't like those situations when they get lopsided, similar to the Swiss franc. So I am a very dollar-yen bull. I'm just going to be very careful. I do think we're going to see the mid-150 levels. I'm studying this move carefully. 147.38 was last Friday's close, and we're sitting around the 147.10-15 zone right here. So we're below last Friday's close. So I'm, holding back on my decision as to what I want to do here.
Okay. Any other currencies you want me to pull up here, Mr. Flanagan, this morning?
Well, that should be about it. Watch the cable. That's the one that's on the radar for this week. They've got a central bank meeting. I do expect a cut of interest rates. Is it a half or a quarter? A quarter seems to be a prevailing market opinion right now. But, Bank of England always could surprise. They're having a lot of budget problems, and their economic statistics have not been, knocking the cover off the ball. So you could easily see a catch-up play. And, of course, if that were to happen, does that put pressure on the Fed?
Right. Absolutely. Well, Thank you so much, Mr. Flanagan. Like always, bringing all of the clarity we need on the Forex market. We will see you on Wednesday, sir. Be nimble with those trades there.
Yes, we don't get caught on that candlestick. You
absolutely, my friend.
See you Wednesday.
Thank you.